Hello and welcome here with Holistic Investments, and I'm your host, Constantin Kogan. And it's my pleasure today to have another amazing guest, Mason Borda, who's the CEO and co-founder of TokenSoft. TokenSoft is the market leader in launching and supporting compliant security token sales through its white label SaaS token sales platform. Mason is an expert in blockchain compliance. He works closely with a lot of institutional projects here. Their platform raised more than $1 billion and they have a lot of great and big partnership, which we're going to talk about today. But that will be all, inside, the conversation. And for now, I want to throw traditionally a legal disclaimer. So this content is for informational purposes only. Should not consider any such information or any other material as legal, tax, investment, financial, or any other advice. So whatever we're telling you with Mason, just take it as a conversation, a friendly suggestion and opinion. Now we can talk about anything else because you're very much into compliance, Mason. So welcome, and let's talk about you.
Awesome. Well, thanks so much for having me. I started in the crypto space in 2013. Initially, I came across Bitcoin. I thought the technology was very fascinating. And at face value, I was after reading the white paper, I was like, this Bitcoin thing is never going to work. It's too slow, and the price keeps moving. And how is it supposed to be a peer-to-peer payments network? And so I started, trying to build a dollar-based blockchain at my first pass. That's how I learned to code and get familiar with the tech in the space. Went on to work at BitGo on custody solutions there. And so that was a lot of fun. That was my first crypto job, and learned a ton. And started TokenSoft in 2017. And we set out to, people were launching tokens, and they were either missing the scalability aspect of it, websites would crash. They were missing the cybersecurity aspect of it, and so people were getting hacked, or they weren't following the compliance part of it. And so we sort of set up a platform to solve those three problems. And we've been launching tokens ever since 2017.
That's perfect. So let's start with maybe the basics for someone who's listening to you and they're not familiar of the difference between utility and security token. Maybe like a 1-minute crash course, the major difference.
Yeah. I guess from a regulatory perspective, we just see it as tokens that are launched and treated like Bitcoin. As they move about. And then there's tokens that are treated as securities as they move about. For the first pass, if you're doing a token and launching a token, there are securities laws that you have to comply with. And so, all the projects that we launch do that. And then there are, for security tokens, there's securities laws, at launch and during trading. And so we've had to build some core infrastructure to bring that to fruition.
Now, if we're talking about security laws, right? We have security laws in each particular country where investors reside. So if you have investors, let's say from 100 different countries, so you have to have multi-jurisdictional consideration, right, of each security laws in each particular respected country, right? Whether it's United States or any country in Europe. So how do you make sure this is taken into account?
Yeah, so I think we had the good fortune of trying to tackle the most complex regulatory structure in all of finance. And so very quickly we learned that, it's not enough to comply with securities laws in the US. Like when we're helping our customers launch tokens, we may have to help them comply in other jurisdictions internationally. And so what does that mean? That means, in the US, investors have to be treated in a particular way. You have to collect certain pieces of information. In certain cases, you have to make sure they're accredited investors when they're investing in something. And when you go internationally, all the different countries have their own laws that they want people to follow when they're either investing in a security or when a company is issuing a security and fundraising. And so that was sort of a fun challenge we got into. We got into sort of helping our customers comply with those laws internationally, country by country. I think the most countries that we've helped automate the onboarding process in was over 50 countries. Mm-hmm. It's about as many countries as there are securities laws that are adaptable to, blockchain-based offerings. And so we got into the weeds with that. And it's kind of funny. All of the laws in all the jurisdictions sort of boil down to 5 or 6 rules. So it's not impossible to do that. It's just a lot of work and a lot of diligence that we have to do to make sure it's done right.
So how big is your team? Like, because I'm sure it took time to actually go over like 50 different countries, and even though those like 5 to 6 rules, so it was a cumbersome, I assume.
You know, what's funny is I think when we did the 50 country thing, that was January, February 2018. Mm-hmm. Back then, we're either 4 or 5 people. So wow. We weren't a big team. We just we have a lot of expertise in architecture, and we know how to talk to our lawyers. And so I think a combination of that helped us sort of operate in a very lean manner and move very quickly to adapt.
Mm-hmm. That's impressive. Like, because I know a lot of firms paying millions of dollars to actually just to have this legal opinion, right? You know, how to be compliant. Now, if we talk about the practicality of things, right? You know, so I'm sure we can go into a little bit deeper, and you can provide an example of a successful project that you raise money for and you structure them so they'll be compliant with all the jurisdictions, and maybe you can brag a little bit about this project.
Yeah. And just to be clear, we don't help our customers fundraise or bring in investments. We more so set up a technology platform so they can onboard all of their investors, whether it's internationally, it's only outside of the US, whatever that may be. And, you know, we went on in 2018 to build some core infrastructure around actually placing a token that's treated as a security on the blockchain. And so we built that technology around a standard called ERC 1404. So you want to put a security on the blockchain. Where do you start? You have to have a way to make sure that only approved or authorized investors can hold a security. And so ERC 1404 is basically a permission token. It's built on ERC 20. And it allows the capability to approve each address to be able to hold the token. So if in a particular country there's a very specific investor onboarding process, we can help them go through that process and then whitelist that investor's address so they can hold the token. And one very popular customer that we did this with was called INX. Mm-hmm. And so they did IPO. Through our platform, they raised about $85 million. In total, they raised, I believe it was over $120 million as they went through this process end to end. And they wanted to do an IPO on the blockchain. And we basically provided the core backend technology to make that possible. So we had the investor onboarding platform. We created a custody solution so we could do a formal key ceremony and hold and manage the tokens in the most secure way possible. We created a cold storage offline multi-sig wallet to sort of administer the token. And then we also set up a transfer agent. We built out transfer agent technology, and we basically worked to help get regulators comfortable with this process. We worked to help map the blockchain into the SEC regulations as they exist today, and to bring that token to fruition. So today, INX token has over 9,000 users and is trading peer-to-peer on the blockchain. And we're really excited to have helped bring that to fruition.
And before we go to the topics of like what's actually the value proposition of doing that, like, how big is the market of security tokens and the secondary, let's talk about like, just the basic principles. Like what is the difference between like, you have a traditional IPO, right? It's just very popular. You go through NASDAQ listing, you go through auditing process, like, and then what's the basic value proposition for investors to participate in, more tokenized IPO, so to speak?
Yeah. I think we can sort of look at the foundational principles of the blockchain to begin with. And, any blockchain like Bitcoin or Ethereum is inherently peer-to-peer. It's inherently global. It's inherently 24/7. You can move an asset at any time, day or night. You can move it between whoever you'd like to. And so those are the foundational principles. And now that we're putting securities on the blockchain, those same foundational principles are true. And so you can move a security 24/7, whereas in traditional markets, you move them 9 to 5 and only on weekdays. And it also allows the issuer to have a peer-to-peer, if you will, relationship with their investors or token holders. And so it enables that direct access. It enables that sort of feeling of community and direct connection with the investor base. Mm-hmm. And it allows these securities to settle 24/7, day or night. And so it's definitely a very fascinating technology. And I think it does enable a lot of use cases that existing technology today does not provide.
Now, what were, I would ask you, what were their most challenging parts? So you mentioned that you have to convince the regulators to be comfortable with that, right? So it's always it's always hard to be a pioneer in something, right? So I'm sure they had tons of questions. How would that work? What are the risks, to make sure it's compliant? So maybe guide us, maybe just some of the 2 or 3 most challenging parts of this.
I think one big component was we put a lot of upfront effort into building a relationship and with educating the SEC. And so we launched our company at a point in time where the SEC was sort of starting to think, are a lot of these tokens securities? And they were looking to learn more and get familiar with, what is the market infrastructure like out there? What are people doing when they're launching a token? Who can help them, comply with regulations? And what does that infrastructure look like? And so we built a relationship with them, and we were invited frequently to do tech talks. And so there were various, components of technology they were interested in, and we were happy to sort of leverage our pre-existing expertise in, custody, and sort of adapting the blockchain into the regulations to help communicate that. So it was a mix of educating them on, what is the most secure way to bring, the global securities market onto the blockchain. How should you think about custody? How should you think about treating these securities securely? And what are the risks? And so a lot of those risks we built technology to help, reduce. And so I guess one major challenge was education. Mm-hmm. The second part of it was I sort of see the mapping of the blockchain today into regulations as sort of a puzzle. And so a lot of it was, we want to enable a particular activity on the blockchain. And so what are the 4 or 5 architectures that we can implement in order to make that activity compliant with today's regulation? And so I think a lot of it is, I call this sort of legal R&D. It's just the engineering team, myself, speaking with our counsel and trying to understand, what are the core requirements that have to exist? And then how can we package the technology to meet those requirements as a product solution? And so that's sort of the second part, is how do you package tech? How do you build it so it meets today's regulations as they are? Mm-hmm. I would say the third was the third sort of challenge comes when, actually educating the SEC and trying to get through the registration process, trying to get our transfer agent license. And that involved explaining to them, sometimes just how the blockchain works, and, how does our ERC 1404 standard prevents, having 2 securities if there's a blockchain fork. That was one common objection we got. You want to put securities on the blockchain? Well, blockchains fork. Are we going to have 2 securities now? What happens if someone's wallet gets hacked? Are you just going to let everyone's, securities get hacked? And so there was a lot of questions like this, and we worked hard to sort of educate them on, why this technology actually is better, why we think it's the future, and why we think that, they should like seeing securities move onto the blockchain. Now you have the compliance inherently built in to the blockchain, and so you can prevent unauthorized or non-compliant transactions. And you can sort of automate that, allow the tokens to transfer 24/7, and have a more vibrant, ecosystem and market out there. So, in the end, it seemed like everyone warmed up to the idea and they were very interested in, what the technology provided.
It's interesting because I believe like there are multiple ways how we can look at it, right? How on the fundraising aspect and being legal and compliant, and right now I just before we started I looked at CoinMarketCap just to make sure I'm still on track. How many coins are there just listed? Like it was. And the number was staggering. We're talking about 21,000, different coins. So I'm convinced that most of them are not doing it in a legal and compliant way, right? So let's talk about like some of the more I would say critical parts of this. So I'm going to go to an example as Avalanche, right? So on your website, you marked that on July 15th, 2020, you did 40, like you helped to basically facilitate the raise of Avalanche, which is a, pretty big blockchain infrastructure. And, $42 million was raised, right? And the combination of like you helping, like, using the TokenSoft as a platform, and for like the average ticket per person was 3,800. There was 11K registered sale users, et cetera, et cetera. So the details are there. Now, let's talk about the practicality. If I would talk to a person who invested in Avalanche or now using their ecosystem, I doubt that they would probably somehow like consider it as a security. They would probably say it's a platform token, which is closer to utility narrative, right? You as a platform that is compliant, with different jurisdictions, you would still consider it as not a security token offering, but something close. It's like a hybrid model. So let's demystify those things, because I think that's where the confusion might come from.
Yeah, there's a lot of cognitive dissonance here because we have a lot of folks come to us and say, why would I want to sell my token as a security? Because, able to get into all the exchanges and all the infrastructure that's there for, tokens like Bitcoin and Ethereum. A lot of the innovators in the space that are launching tokens, just like Avalanche, wants the tokens to be distributed, decentralized, be movable peer-to-peer, just like Bitcoin and Ethereum. And I guess the way that I would put it is that there are two phases of a token. One is when you're actually selling it. So when an issuer is selling a token to investors out there, that's sort of the first phase of the life cycle of the token. The second phase is when the token is actually out there and it's moving around. And so I would sort of decouple those two phases. When you look at a token like INX, that's a security at sale, and then it's intended to be treated as a security during trading and transfer later on as well. Mm-hmm. For the tokens like Avalanche, we sort of service them at the point of sale. And so we ensure they comply with securities laws at point of sale, which is a conservative thing to do. If you are, launching a token and you are more conservative, you're thinking more long term, how can I make sure there's less, corporate risk? It's good to comply with securities laws wherever you can, wherever practical, and wherever your counsel guides you to do so. It's not for me to say. During the second phase, we don't actually have any parts in that with tokens like Avalanche, and so the tokens sort of get distributed. They are launched in any case, and for that phase, it seems like the legal community is saying, those tokens are distributed, they're out there, and at that point, they're not a security. And I think there's a big gray area there because he hasn't provided explicit guidance. But a lot of the projects that we do, we help them comply with securities laws at point of sale. And then after the fact, when they're being distributed, they may get treated in a variety of ways based on their counsel's guidance.
And it's interesting because, again, there was a fixed price, and the mechanics were that, you do KYC for every investor, correct? Right. So there's no option to actually get into the deal without the KYC, which is great. That means you know exactly who is buying and where they're buying from. And then if you get audited, you will be able to kind of reply to who's sold in your token. But the tricky part is that as the moment it is listed on centralized exchanges and then decentralized exchanges, right? Then it's like, then the rules are off, right? Because like anyone can buy it, anyone can trade it, anyone can manipulate the price. And then, I'm not even talking about that layer 2 infrastructure that is built on top of Avalanche, right? So which is a completely different story, right? So I'm just curious, like on a practical side of things, like, some of the folks who were asking me about your project, right? And they're asking me, so they're like, are there like a seed invest of crypto? Like, do they help to raise money, like just in a compliant way for US customers? Because if they don't, why would I use them for non-US customers? So I wanted to challenge you with some of the basic questions and maybe you can go further. Yeah.
Blockchain and crypto in general is something that was very grassroots since inception. So Bitcoin is something that sort of emerged in a very grassroots way. A developer put it out there. Other people slowly learned about it. They were like, oh, this is novel. This is interesting. And, more and more people adopted it and built tools around it over time and built market infrastructure around it as well to allow for purchase of Bitcoin and, wallets to now enable transfer of Bitcoin. And so and I would say that the best projects that we see employ that sort of ethos today. And so they are projects that will spend a lot of time educating the community, building an organic community over time. And then at some point, they're going to have, a token that they roll out on mainnet that gets out there. And so I would say, if a issuer's expectation is for our platform or for any platform out there to help them with the fundraising, it's sort of missing the point of crypto. The point of crypto is that, you actually have innovative tech. It's interesting. It does something new and different. And people surround your project because they think the technology is novel and interesting. And so, if a project goes and someone brings investors in and they bring in, let's say, $10 million, that's sort of what happened in traditional markets. I feel like with IPOs, with traditional fundraisers. In the world of crypto, it's more about sort of building something new, building something innovative, and having people come in, based on the merits of the tech. And so that's sort of like how I see it. And so like with every project that we help launch, we try to make sure that, we educate them on like, hey, the most important thing is that everyone knows how your tech works. They know how, your application works. And that, they're familiar with, what you guys are building. And it's more about sort of building that organic community and following versus, the actual fundraise. The fundraise is more so a way to get people engaged. We saw a huge from 2017, 2018 from really large check sizes per investor. And we saw that average come down a lot. So with Avalanche, you saw the average check size was 3,800. Up until last year, we saw an average check size hover between 3,000 and 500. And I think that signals that the crypto space has, sort of realized that this is not as much about fundraising as it is sort of like building that initial community and doing it through a token sale where there is sort of some exchange of money. Just helps make sure that people are there for the right reasons. They're bought in, they're serious. And so that's sort of what's happened in the space over time. And that's sort of how we see it.
Now, one of the narratives that you're providing is like you're a fair launch platform, right? So I want to make sure that there's also no cognitive dissonance in this side, because like a lot of people who are like thinking about like fair launch, similar like Balancer or any other like things, they're like, well, okay, well, I'm going to get in. It's like completely decentralized and I can just buy in a certain price points, right? Where it's beneficial, like for me. And that's like, it's like a type of ICO/IDO just on steroids, right? And and then you have some multiples, you get some tokens that are unlocked, you can speculate and sell them, or you can hold them and stake them, whatever you want to do, right? The question is, in your case, I assume it's a very, very different narrative. Like the fair launch, I think that in your definition, the fair launch and the definition of people who think about the balancer of the world, right, will be very, very different, right? So let's also explain the distinction from this side.
You're asking very good questions. And so the fair launch concept sort of came about in, I believe it was maybe 2018.
Yeah.
And it was 2018 or 2020. I think 2020 became really popular. And the reason was, they were sort of looking at Bitcoin and saying there was no fundraise for Bitcoin. It was just people mined it, or they started, playing around with it. And that was sort of a fair launch. There was no fundraise, which is usually seen as, hard to get into, exclusive, only people with significant capital can get in. And so this fair launch concept was adapted sort of from those Bitcoin principles. And it was to sort of say, hey, we're a new token project, and we want our token out there, and we're not going to fundraise for it. We're just going to give it out to people. And that way it's fair. And, we sort of saw this happening, and we were like, you know what, this doesn't seem fair. It looks like projects that are lower quality are adopting this methodology of just giving out tokens and sort of trying to paint it with fair launch to show that, they are of, good moral standards. And so I think when I saw that, I was like, this isn't quite working because it's getting gamed. These communities are full of bots, they're full of speculators, and people are just trying to flip the tokens. And that's not good for the projects, and it's not good for the general community. And so I thought the first iteration of fair launch sort of did not provide the intended effects. And, in watching our customers launch, what we learned was, we're actually doing a better job. We're sort of doing a fair launch 2.0, and it's actually making these communities fair. And, why is using TokenSoft the fair way of launching a token? Well, I was like, we sort of check that box because, number one, we ensure that there are no bots that are sort of gaming the system. And so, you see a lot of communities out there, and they have, they have a crazy amount of followers on Twitter and Discord. And I think we saw this with the Aptos launch. The wallet had hundreds of thousands of downloads at launch. And anytime a number is too good to be true in crypto, it probably is. And the reason that, some of these numbers are so high is because people are setting up bots to either purchase a lot of allocations in a certain sale, or they're setting up bots to download a wallet at scale so they can get as much of an airdrop as possible. Mm-hmm. And that's something that we don't think is, we think it's a little bit disingenuous because a lot of that user base that, the issuer sees as sort of a virtue is largely not real. And so we realized our platform was really good at making sure only real users get into sales. Only, these real users can have sort of a fair allocation. So there's not one big investor that's coming in, getting a really big allocation, and then selling it on the market before, the smaller users. And so we realized our platform is really good at that. It's really good at making sure that the community is a little bit more healthy. It's really good at making sure community members are longer term thinkers. We launched a couple new concepts. So obviously time-based vesting is something that's very common out there with tokens or with, investments as well, where, it's the concept where you purchase something or you're given a token, and it doesn't fully unlock on day one. It sort of operates like employee equity, where, maybe there's 4-year vesting, mm-hmm. and it's not unlocked after 1 year. And so you don't truly own it before that 1 year. And after that 1 year, now you truly own it, and you can maybe go sell a chunk of it or, keep it if you're long-term minded. And so we started rolling out lockups for our customers. We started rolling out, as a technology, we started rolling out the concept of, what if you could purchase a token, but the token only unlocked at a certain Oracle price. So, for example, what if there was a purchase of a token, but it only unlocked when Bitcoin hit previous all-time highs at 70K? And so wouldn't that be a great way to sort of ensure that people were long-term holders and long-term minded and, truly understood the projects they were investing in? They truly understood, how the technology works, and they were sort of bought into, subscribing to these projects on a longer term horizon. That's how we see the fair launch and how it should be. And that's why we started, using that messaging, because we do think that we're enabling fair, authentic, more real communities out there. And that's on the whole better for both the project developers as well as for the community members that are out there today.
Now, if we go to the nitty gritty of this process, right? So let's imagine I'm a project, right? And I'm interested in what you're providing. I want to raise whatever. My goal is to raise $20 million, right? And I want to set up in a compliant, legal way. Now, what you're saying, you're not helping to raise money. I need to drive traffic to the platform, whatever we set up the platform. You help to provide the infrastructure, right? The technology, and to make sure it's legal and compliant. Now, I don't know if it's confidential information or not, but what are the timelines and the pricing, so for such services? You can give a range, and obviously it's per project by project. I'm sure it's different, right? But at least a range for a project to understand what they're dealing with, because it's one thing when you're raising a small round of a seed, 2 to 5 million. Maybe it doesn't make sense. Maybe there are other ways to do that, right? Or it's another story when you're raising or a Series A or next consecutive or a big fair launch raise of 40 million, right? Then you can afford a more expensive infrastructure and making sure it's to the certain level, right? So let's talk about the timeline and the pricing, please.
Yep. And just to start out, I always tell customers or prospective customers, it only really makes sense to use us if, number one, you want to follow regulations. And number two, if you want to sort of scale the process, whether it's for a fundraise, whether it's just for a token distribution, we sort of help to get to the scale, because, it's sort of hard to manage paperwork and compliance for 10,000 users. And a lot of our customers do have, 10 to 50,000 users coming in to engage in a token sale or token distribution, whatever form it may take. And when it comes to sort of timelines and pricing, we've been at this for about 5 years now, so we can move pretty quickly. So if we need to move in 1 week to 2 weeks for a customer, we can. It's really important that customers spend a lot of time on community building, because if there's not a large community out there, then no one's going to know about the project, and that's sort of an important component. And in terms of pricing, I can't get into specifics, but I would say that it only makes sense for projects to come to us, if they've already done a seed round or a Series A. And the reason is that, just to afford the legal team and the lawyers and counsel to get through, any token distribution process is quite expensive. To, process tens of thousands of users, for us is expensive as well. And so I would make sure there's sort of a couple, perhaps fundraising rounds under the belts before engaging in this. So, if a project has raised, let's say anywhere from 4 to 10 million already, that's the point at which it makes sense to engage in a process like this. Because, these projects are going to do this once, they're going to want to do it right. They have investors that are obviously long-term thinkers that are high quality. And so they want, their portfolio companies to follow the regulations. They want them to do it right the first time if they're sort of getting a token out there, and they want them to build a authentic community. And so those are the points at which it makes sense to, come talk to TokenSoft and see what's possible.
So let's talk about other different scenarios. So I'll give you one scenario where the company is raising equity round and they will have token warrants, right? So the token will come into play a little bit later, right? So is this a good customer for you?
So, and this would be for a seed round?
Let's imagine either seed or Series A, whatever. Seed probably too early because you mentioned that, right? So I assume Series A would be probably more reasonable, but let's imagine Series A, 10 to 20 million. They already raised seed, yep. And then they're now doing, but they did it in equity, right? So now they're raising another round. There's no tokens yet. There's only token warrants, which come into play a little bit later, right? But they still want to raise an equity round. So does it even make sense to go to you guys?
Yeah. So anytime, I would say it makes sense to use us if there's a large scale of users. Mm-hmm. And so if this project only had, was expecting, 10 investors or 25 investors, then I would say, hey, it really doesn't make sense to use us for the scale. It wouldn't be worth the money to sort of use us. The point at which it makes sense is the point at which they want to fundraise. They want to fundraise from, I would say, over 100 to 200 investors. Now, I wouldn't say it's economical to use us at that point, but that's the point at which the paperwork becomes hard to manage. And so I would say that's sort of like the threshold for the process becoming unmanageable. And then at that point, we can sort of help scale the compliance process. But more importantly, we also help scale the legal automation process. There's a lot of documents that have to be signed, executed, and that's a big portion of what we do. And because we are sort of anchored in helping people comply with securities laws, we can help scale that process regardless of the instrument that's being sold. Mm-hmm. And so whether it's equity, it's a token that needs to be treated as security, it's a warrant, whatever it is, we can sort of help scale that process and make it a much more quicker, leaner process for the customer.
Great. So now let's imagine a second scenario I'll provide you. So imagine a company already raised money in a token round, whatever it may be, like $1 million, 10 million, doesn't matter. So it already has a token that is listed on exchanges, whether it's centralized or decentralized exchanges, both. Now they want to do a second level of raise, right? And then the tokens distributed, everything fine. They're operating black and white. But obviously they didn't do it in a compliant format the first time, right? And now they're coming to understanding, okay, well, maybe we did something not 100% right. They tried, but some founders coming from a developer background or product people, the background. So they just literally didn't know. Now they want to come and do it in a proper way. Would you even accept this type of client?
Does this project have a legitimate law firm they're working with?
Let's imagine yes.
Yeah, so I think the problem here is, if compliance isn't followed when the token first gets out there, this becomes a little bit of a cleanup job. This may be called out there, might be called regulatory remediation, or maybe they need to take the existing token holder base through a compliance gate. And I feel like we may have done jobs like this before. And usually what happens is the people that are holding the token are now instructed to come send the token to a wallet where it's burned. They may have to sign some paperwork. And from there, they might have to sign some new paperwork that gives them a new token in a new format. And that's usually what we see in cases like this. And so it's more of a you put the token out there, it's moving around. You're not sure if you followed the right compliance program or the right regulations the first time. And so you need to sort of do a little bit of a cleanup. And you need to sort of rein in all the tokens that are out there and issue a new token in a new format and new regulatory sort of structure. And so we've seen stuff like that before, and we're happy to help if it's a legal team that's well versed in the world of compliance, securities, and global banking regulations, we're happy to help.
So, and that would apply even if the project did not raise any money from US investors, right? It doesn't matter.
Yeah, and I would say our role here is more so compliance and helping get something redistributed than it is sort of a fundraise. But our platform's configurable to the point where it can sort of service any sort of compliance automation. And so, we've helped with a lot of fundraisers. We've done a bunch of airdrops where there is a compliance program that needs to be followed. Token distributions, we can help with just general civil resistance in token distributions. And, we've gotten into servicing hackathons as well. A lot of folks are now using TokenSoft for hackathons or just random corner cases where they need to follow, a compliance program.
Mm-hmm. Yeah, it's really interesting because I didn't do this analysis, but I can bet you that like statistically probably 95% of the token issuance were probably not 100% compliant. So I would just imagine what efforts would it take to actually come back and to redistribute them? Like, again, like, it means that according to your perspective and how you guys see the world, like, we're operating in a very gray area as an industry. I mean, and which is fine. It's probably where we are right now. Like, and we just have to admit it and understand how can we move forward from here, right? And I'm sure there's going to be a lot of degens, like hardcore degens, who would probably be completely not happy with this particular strategy, and they would say that probably it's against the Bitcoin core, like narratives, et cetera, right? Yet we're still in a very practical world where regulations and governments exist, and we have to comply somehow with them, right? So your role here is kind of try to find the middle ground between decentralized worlds and centralized worlds and products that how can we make sure it's working together? Is this a correct assumption if I would summarize it?
We're basically a sort of a layer for any tokens that want to come into the world. It's sort of, there's going to be existing regulations. There's going to have to be some rules that have to be followed. And so we're sort of that layer in between the projects first being developed and the tokens coming out there into the world. And, it's a hard problem because even myself, a lot of the folks in the space are highly technical, and we're really good at software development. We're really good at, pushing out a lot of code. And, we build a project, we put it out there, and now we learn that there's all these laws and regulations that we have to follow. And that's sort of how I got into the space. Is I built a bunch of tech, and a year later I went to talk to lawyers. And I learned that, there's all these complex laws and licensing and all this stuff that's necessary. And as a person that likes to do things the right way, I'm the kind of person that likes to follow the rules. I like to do things the right way. I'm concerned about my reputation, my career. And so for me, it was really important to follow the regulations that are out there. And so that's sort of how I landed in this spot. And I think our role now is to sort of, for those developers that are out there that just want to code, they don't want to be sort of regulatory or legal and compliance experts. We're sort of happy to help them get over that chasm and help them get back to focusing on just coding and pushing out products and get sort of past gray area where they don't know, what are all the rules I have to follow. They don't necessarily, they're not compliance experts and they don't want to be.
And that's another interesting point, because, I would assume that right now, to be even more specific, we're talking about the primary offering. When people are trying to release the token, right, with a particular intent to fundraise it, like, either it's the first time, second time, but still like to fundraise, and then from there list it somewhere. Because as we talked about in the first like in one of the second example, where the token is already listed, then it becomes redundant because it's already out there, right? So people can trade it, they can do a lot of things. So it will be really, really hard to delist it from exchanges and then to go burn the existing token or do the swap. I mean, it's doable, right? As you mentioned, there are methodologies, but who would do that, right? If it's already operating. So mostly you're focusing on primary offerings of the companies that like either haven't launched their token yet, or maybe it's launched in a very kind of hybrid model of a DAO, let's assume, right? And it's still kind of like might have a different utility or maybe another synthetic additional token. Is this another assumption that we can talk about?
Yeah, I think that's right. So whether it's a DAO, whether it's a centralized company that's developing some software that has tokens involved in some way, we're sort of the layer that helps get it into the market at inception. Mm-hmm. And so that's sort of what we see ourselves in our role.
And with DAO, I assume it's even harder because then like legally, then you will have to deal with a very different structure. So with centralized entity, it's a bit easier. So you have board of directors or shareholders. Now with a DAO, it still has a legal representation, but I assume it's a little bit more complex.
So I think what happened in DeFi summer is a lot of people saw the term DAO and the act of launching a DAO as a way to get to market faster without following regulations. Mm-hmm. And so you saw a lot of anonymous teams. You saw a lot of treasuries just held in multi-sig wallets. And it's kind of funny, 1 or 2 years in, it's sort of, they start to realize, wait, am I personally liable? How do I pay taxes? How do I, all these sort of questions that usually you ask when you start a normal company, and so DAOs sort of started there, and now they're back at square one, where actually you have to do all of the exact same things that any other project was doing before this became buzzword, and so everyone's back at square one. And it's like, well, the process for launching a token before is actually the exact same as launching a DAO today. It's like you do need an entity to be the issuer. You do need a legal structure. You do need bank accounts because people want to get paid in their bank. They want to get paid in cash. They want healthcare. You're going to want to pay taxes through a corporate entity, so you're not paying taxes yourself personally. Mm-hmm. And so it's kind of funny. We sort of saw the space, see the term DAO as permission to do anything. And over time, as people want to do things right, more professionals get involved. We're back at square one. And so, if anyone is launching a token or a DAO out there, I would definitely, have a casual conversation with a law firm. You don't need to have them on, retainer or have a formal agreement. Just at least get familiar with, what you should be worried about and when is the right time to worry about this type of stuff.
Yeah. So coming back to some fun news, because we're talking about technical compliance stuff, remember in 2016, you have shared that you pre-ordered a Tesla Model 3 using Bitcoin, right? And then are you still buying the Tesla for Bitcoins or not anymore? Or you're hodling?
I've made a few bad decisions with respect to my Bitcoin holdings over time.
Okay.
The first one that happened concurrently with ordering the Tesla with Bitcoin was paying my rent in Bitcoin.
Oh, when was that?
So that was 2015, 2016.
Oh wow, that's expensive rent.
And the second mistake was, I was like, it'd be kind of interesting is if I could purchase a Tesla with Bitcoin. And so I used a app out there, which is still in the market today, called ShakePay. And I used that to send in Bitcoin and to have that convert to cash to send to Tesla on the other side. And so I pre-ordered a Tesla Model 3 at that point for Bitcoin, which I later canceled because it took too long. And so that was the second worst thing I've ever made with Bitcoin.
Okay.
So today it's a lot harder to get me to part with my Bitcoin. Mm-hmm. You can't do it. This is not a challenge. It's just harder for me to spend my Bitcoin these days.
because you don't need to and you're hodling. Any price point that you would consider maybe like cashing out a little bit or not?
I see Bitcoin as sort of like a 401k where it's super long term. It's kind of fun for me. Like, I genuinely like the technology. I think it's really cool. I think a lot of the elements of it are really interesting, and so I haven't thought about cashing out the Bitcoin yet. I'm sort of just looking at it on a very long term. It was sort of my first passion in the space, and I still, sort of see it as a model and a North Star for the crypto space.
Mm-hmm. Now we're in the end of 2022. It was it's already December. It's a hardcore year for everyone. Like, I would say, like, the war, Ukraine and Russia, the bear market, like, from multiple, like, explosions, like ranging from FTXs of the world, block or Voyagers, like 3 hours, etc. Now, what do you think? Let's speculate a little bit about the projections of 2023, and if you want to go a little bit to 2024, how long will the bear market last according to you, and what are the efficient strategies how to survive the bear market?
So, I think when I'm thinking of price points, I've sold a Bitcoin 20K hat. I've also sold a Bitcoin 100K hat because I thought I wouldn't need the Bitcoin 20K hat again. Last week I had the opportunity to wear the Bitcoin 20K hat again. So I think if we're looking at like bear market and recovery, I think these things usually last 1 to 2 years. Mm-hmm. I think we saw Three Arrows Capital go down. We saw Terra and Luna go down. The one no one was expecting, I feel like, was FTX, except for a few geniuses that I've spoken to the past few weeks. Mm-hmm. And I think the FTX thing caused a scare with Genesis. So we saw a lot of folks start to question Genesis as well. A very long, well-established platform, billions in holdings, mm-hmm. Very good reputation. And I think it's going to take some time to see, how else this shakes out. With FTX going down, it affected a lot of funds treasuries. It affected a lot of startups treasuries. And so I think in the next 6 months, we'll perhaps be out of the worst, and we'll see, what other startups were affected. But I think hopefully, by the end of the year, we'll start to see a little bit more confidence restored. We'll hopefully see, people focusing on the great tech that everyone's building. There's a lot of great teams, a lot of smart people continuing to build good products. And I just think it takes a little bit of a shift in the news cycle for the market to be a little bit more optimistic, mm-hmm. to be a lot more happy, and to sort of bring new folks into the space. So I'm sort of thinking end of 2023, we'll start to see that narrative change, and we'll start to see people focused on, what are the great things that are people building out there, and, what's actually, interesting about the technology.
100%. I agree. And it's interesting because it's going to be also my third cycle in the space. And like what I've noticed that it's right about like 3 to 4 months roughly, before the halving that's happening, which so we don't know exactly when it's going to happen, but preliminary what we know is that somewhere between the February and June. So maybe April, maybe May. But I believe like, yeah, if you account this logic that like a quarter before, which is presumably like it's end of 2023, like people starting to bring this hype, the halving is happening, like, and then there is entire excitement coming because he's, CZ in his interview recently said like, Bitcoin is still a barometer. It's still an index of the health of the entire industry, right? If Bitcoin is healthy, then everything follows, right? So yeah, I think it's a very accurate, assumption that for now, we're probably going to have another year of bear market, which is, again, opportunity for a lot of folks to get into the space cheaply. Actually, a lot of my friends, they're actually buying right now, like top 10, like, again, not an investment advice, but just saying, like it's sometimes you want to get into the particular token because you believe sincerely in the project. It can be a layer one big project that that they have huge partnerships, and you do believe it's going to develop like and become an infrastructure of the future. So, and now is the time, to consider it, right? Not when it's already peaking, as most of the people are coming into. Now, from your vantage point, like again, like you're a builder, you're a creator of a successful platform. You helped a lot of other platforms. So, what other aspects excite you right now besides what you do? Let's talk about like something that really, one of the applications that you recently came up to, whether it's crypto or NFT or something related to our space, that you personally use and you're actually excited about it.
Yeah. So as someone with a technology background, I'm always drawn to sort of new innovative tech. And so I think in the last cycle, we saw a lot of copycat projects. So AMMs or loan platforms that are sort of hopping from chain to chain in this, with a similar code base or the same code base. And I think I've sort of only seen a few novel things come up in recent times. So one thing that's sort of interesting is that I'm excited about right now is hash flow. And so that takes a RFQ model for trading and applies it to the DeFi space. And so you have you can do small block, large block trades with no slippage. And I sort of think the AMM model was really good for bootstrapping in DeFi summer, when things were new and the market is small and young. And I think a lot of the infrastructure that's out there is going to converge in traditional formats. So I think we'll probably see more on-chain order books. We'll see folks like Hashflow with their RFQ model for sort of a better AMM. And I think that we'll see stuff like that, like the layer 2 scalability layer is there. It's proven. It's trusted now. And so we're going to see people that are more comfortable with scale sort of coming onto the blockchain. And I think Polygon is doing a really good job of that, of bringing major brands onto the blockchain and doing it at scale. And so that's another platform I'm interested in, because they're able to get partnerships that no one else is able to get into. And I think part of it was first mover advantage. Part of it was great business development, relationships, and the ability to execute there. And so that's been really interesting to follow. I think other interesting things are sort of the bootstrapping of real world networks using a token incentivized model. We see that with Helium. I believe there's another platform, Pollen, and Demo Network that's doing that. Demo is more so taking car data, collecting car data, aggregating, anonymizing it, reselling it. And I think those are sort of some of a few things that I think are kind of interesting, new, and different. And, I'd encourage any sort of innovators out there that are building. It's not about sort of the incremental improvements that we can make in the space, but, how do you get another, billion users onto the blockchain? I think it's going to be very new, novel use cases that no one is implementing today. And so I think, the Helium, Pollen, Demo is sort of doing that. We didn't quite think about those things before, but someone was able to think in a new, different format and be bold enough to bring those to market, and so they really took off. So I think that's what I'm excited to see in the space, is just things that I wasn't expecting.
Really interesting. Now, I have a personal question, and I specifically don't notify any of my guests about this question because I want it to be as genuine as possible as an answer. So now I want to ask you the most important question, which I think, right, there is on planet Earth, right? What is the meaning of life to you, Mason?
The meaning of life, we're on this planet for a finite amount of time. And, if you do nothing, it's really boring. So it's really important to keep yourself busy. And it's important to sort of leave the world in a better place than when you arrived. And so I think the meaning of life is to spend time on things that are meaningful, that sort of improve the human condition. And that's what we should spend, most of our time doing. And so that's sort of how I see it.
I think it's very good way to look at it. It's very concise and straight to the point. Mason, really interesting to learn from you. Really amazing thoughts, and I hope people who will watch it will enjoy it. We'll share all the information about TokenSoft. If you have some guidelines or anything, we're also going to provide them that so that we'll have people have better understanding of how they can participate, whether they're launching a new token or just want to read and understand more about your platform. And yeah, we'll share all your information, whether all the social media they can follow you. You can share more information about what other fancy car you're buying for Bitcoin, maybe closer to 2024. Or maybe maybe you're just going to tease people and say oh, you know what, I'm going to huddle. Thank you so much. Always a pleasure.
Thank you so much. It was a pleasure. Really appreciate it.